Hello and welcome everyone to the Delphian weekly meeting. Thank you for tuning in. So today, got a nice agenda laid out for you. So we'll do the regular market update. I'll go through and run through the sectors again. It's been long enough. We can go through and review the spider sectors to see which ones are bullish and not. And then Sudhir is going to basically do a follow-up to what Lee had presented. And then I think Joe had a few comments at the end. So that's our agenda. Let's get started. I pulled up a few headlines as things, I thought were quite pertinent. This one's definitely very interesting. Wall Street warns market liquidity is getting as bad as 2020. I've been saying for a while, once the spigot turns off from the Fed, the bid is going to dry up. So that's pretty much reinforcing what they're talking about here, saying that, any kind of size is really moving prices, which is, is size in the order, which is what normally happens. With the Fed, pulling out here, and once again, I keep reiterating, it's going to get real interesting in June. But I just thought that was pertinent. If you wanted this, I can put this in the chat so you can look at it. And this is the other one. It's the news driving a lot today. I think, the down day, I don't try and explain everything, but, the Fed definitely drives the market. So this right here is very, hawkish. So, they're going to, if inflation's clipping at 8% right now, according to their metrics, I mean, we're a long way from that. So I don't think the market really like that. But this is all open to their interpretation of what inflation is and everything like that. So there's a couple articles I thought were interesting out there. Oh, there was another one. I don't know if it pulled up, but people, there's an article, it's very interesting. People that were in like RSX, which is like a Russian ETF, which is pretty much stopped trading. Like people that were short in that are now like getting charged. They get charged each day basically, for loaning, so they can't get out of it. Like it's totally illiquid. It doesn't trade, but they're supposedly looking at a profit, but they're, in the interest, the charges are going higher and higher. So these people that are short shares are just, paying perpetually until this thing gets resolved. So I thought I haven't seen anything like that before.
That's a good reason, Josh. That's a good reason to use puts.
Well, yeah. It's true. Yeah, that's true. But I mean, if you get assigned, short shares at any point, it's really, I mean, there should be really like a whole study on what happened to all the market participants with that RSX. Those type of funds, as soon as they pretty much stopped it. I mean, what these people are just, out of luck. None of them can close contracts. What happens to all the ones that had expired in the near term? Were those people assigned shares? And I think it would be a very interesting, just like case study. And, I feel bad for the people that are really stuck behind the 8 ball with that. But yeah, it's a good point though. So that was kind of, obviously very interesting things going on in the market. So overview here, we're all in eights, all the major indices. We're pretty much like right where we were last week. We had gone up a little bit and we're kind of right back. I think we were around 85 last week. So we'll take a look at that market pulse, and then we'll go through the key indices here. I'll just pull it in kind of closer here. So I think last week, we were right here, 85. Now we're 84. I mean, it kind of looks like it's rounding. Hard to say, with today's action. Definitely very elevated readings. This is the bullish bearish. I have not the state 1 and 8. So I wanted to pull that one up first. Like the coronavirus, we got up to like 90, let's call it 97. So, we hit pretty much 87 here. Back here, 88, 91. So these are usually high marks. We're in that kind of territory. Hard to, I think one thing that does, at least look a little bullish is, this, we look at the significant drop in lows here, from 2,130, I think it's like, 184, 216, 123. Obviously nothing moving on the new highs. I think we'd have to have a pretty good movement for stocks to start making 52-week highs. But that one's still pretty much flatlining, and we're just, kind of repeating this sequence. The tremors are getting larger and larger, right? Since basically, this is November 17th. I just kind of think of it like, beginning of the year. But, back here, we even had some decent ones, but it just seems like, these things are growing bigger and bigger. I'm not sure if that's, waiting for June or, the next rate hike and asset sell-off from the Fed. I'm not sure, but, it just keeps doing the same thing here, just kind of building larger and larger, which is kind of ominous. But, this is definitely this was like a near-term bullish on Friday. You see these lows really drop. So, if it's going to keep repeating itself, it'll kind of dwindle down there, you get some movement, and then, you get another spike. That's kind of how this, bearish market has been rolling. We are very elevated up here. So, down in the 12% bullish range. So, it's definitely not like a 2020 event. It's more like a, 20, this is the last time they raised rates here back in 2018. So you can see, started getting tremors and you had like a big event, and then the Fed stepped in. So, I'm not sure how long they're going to let this go. But they're sounding very hawkish, which means they're going to keep raising rates. So, it just kind of rhyming a lot with this kind of occurrence rather than other ones. So, so that's bullish bearish. We'll do a quick state 1 and 8, very similar story. For anyone new, this is just under stocks and then market pulse. That's where I pull up these charts. Last week, 62? So we're a little above that, 68. So, and you can always pull these back and look, historically, we got up to 86% in state 8s here. Back here, 78. So, if we're at 60s, I mean, we could have quite a bit left, to get to those kind of levels, as far as, moving down there. So, all right, let's take a look at SPX. So, outside of this Fed day, this thing is pretty much, roll in like our typical pattern. So we get down here, get into resistance, come up, you know, have problems getting above this level, and then we kind of run down from there. About 20–30% we could get below these kind of key levels. This target 36.72. So the expectation right now is if I think today's pretty ugly out there. But if we can break through here, we kind of plan for the average move, which would be 9%, 3,800, which is a very critical level as far as our charts also. So we'd expect this to, in the next couple week or two, to get, retest that 3,800. If we're following this typical pattern that goes. So it seems, outside of these 2 days, that was Fed, that was Fed reaction. But since then, if you throw those out, it's pretty much following a typical pattern. So if it's following a typical pattern, I'd expect it to at least hit the average move, which is 3,800 overall. So that
we're currently at 39.51 below target 2.
Yeah.
Today.
Okay. Yeah, I haven't looked. Let me close out a few of these.
It's ugly.
Yeah, it's pretty ugly out there. I think the other two things, like Target and Walmart really got hammered the last day. Yesterday was Walmart, today's Target. I mean, those are kind of very important stocks as far as the consumers. If you're, I'd pretty much go to the Walmart for groceries, right? And, so I think those are kind of bellwethers that people really look to also.
Target just sank more than 20% today.
Yeah, they're getting murdered. So I think it's part of inflation, supply chain, mostly inflation, I would think. People are getting their pocketbooks hit, so they're buying less. I don't know if they're keeping up with the inflation, pricing wise, as far as they get the I don't know if they're passing on all the inflation costs yet to the consumer, so I'm not sure about that. So it's going to take a little while for them, and if this keeps rolling at this kind of rate, they're going to have to figure out basically a new system that, they're going to be changing prices very frequently. So hopefully, that doesn't happen, as we all are consumers. Going here, we broke into the second level. We got our key range here, 3,800, which matches up with that average move, 3,800 over here. So this is really critical level for SPX. We won't even talk about the next level down until it gets through there. The upper end of that range is 4,200, so it's right below 4,250. So we're still pretty much right in the almost in the middle of that range. If we're at what 30, you said 39.50, so we're kind of right in the middle of the range. My thought is that I think we'll be in this kind of range up until June, but we'll have to see. I know the Russell ran down and basically bounced off that 1,700 level we've been talking about. So SPX hadn't even gotten down to their 3,800 level, but my expectation would be for this at least until June, when things start getting real interesting, for this to be within this range of 4,200 to 3,800 for the next few weeks. So let's look at the Russell. So you can see that 1,700 down there. Also pull it up on the chart here. So pretty much, went down to 1,701 and then pretty much jumped off of it. So that's a good sign. You know, it's kind of like these where, you know, it tested, you know, this 19 level and then, you know, ran up, 19 ran up and then eventually what failed, right? And then went down to the next level. So this one's kind of been leading things down. It's already made its average move. I would say the critical level is obviously 1700. I'd kind of watch SPX a little more. As far as state modeling, the only thing I'd look here right now is, you know, if it can get below that and hold below that target 3, that would be what you would want to watch for there. But you know, as far as this kind of levels, you know, same story as SPX. So I'd expect it's going to be range bound. You know, is that 1900 and 1700. So our previous support of 1900 is the resistance now. You can see here, you know, it popped up and then failed, ran all the way down. So we're pretty much right in the middle of that range right now. So I think it's kind of same playbook as far as the charge that I'd expect, you know, expect these to stay in that range. You know, if they close below them for a few days, then definitely big flags should be going up for you, either on the upside or the downside. So that's a quick on that. Before I get into spiders, is there any questions or comments? You're muted, everyone, so feel free to unmute.
The interesting thing is that VIX is not skyrocketing.
I didn't even look today. Well, it's already elevated, right? When it doesn't even have it on here.
25 or something.
I think the thing with VIX is if we trade to new lows, then it'll, you know, take off again. It is still certainly elevated, but I think we need new lows.
Yeah, it hasn't got, I mean, this is year to date. I mean, 36. I mean, it's still, yeah, it's definitely not like skyrocketing. But I mean, it's up a little bit, you know, as far as VIX on a pretty ugly day. But yeah, oh, we're down like 3.5. I would expect it to be bigger than that, yeah. But we are elevated, so yeah, that's definitely interesting. You know, the other kind of key thing to watch, obviously, I talk about this. This is your key, and you know, the Treasury, the 10-year. That's, I think, the critical one to watch. You know, we got above 3 here. We are up at like 314 range here. You know, obviously dropped down, very volatile. I think that goes in with the, you know, the moves on these are just getting pretty big, you know, on a relative basis. And, you know, I think that article basically talked a lot about that. You know, it's like, you know, the bids kind of disappearing. So large orders are really moving the market at this point. There's no backstop out there. I think that'll definitely be interesting, you know, once things start becoming, you know, the Fed is actually selling. This is going to be very interesting come June timeframe. So, you know, I think, you know, the chart I showed you guys in the past, you know, over 4% on this, you know, things get real ugly for stocks. So, you know, the last time, you know, they raised rates here, it got up to 315. So I'd say, you know, we got up to like 314, you know. So, you know, above there, I'd just be, you know, kind of cautious, you know, above, you know, that 315 kind of range. You can see this like drastic move up here. Is this the last time things really got ugly here in 2018 for those couple of months? So, but over 4, you know, historically it's been, you know, where things start getting dicey. But, you know, that's historically, And we're definitely in a little bit of a different environment now with all this Fed money out there awash. So yeah, thanks, Sudhir. Let's pull up the Fed tool real quick too. Anyone else have comments or questions? So we're about a month out to the next meeting. It's pretty much right now guaranteed almost to be a 50-point hike. You know, the last meeting, they said they weren't going to do 75 in so many words. So that's the expectation right now. So that's what the market's reacting to. And I haven't seen big changes here, really. In the past week or so, pretty much been stable. So not much more to go off of that. All right, anyone else before I do the quick? Yeah, okay. So obviously this is turned as of April, you know, cross below. I mean, technically it was in March. I really started to see that movement here on the MACD, and I'm kind of focusing up here right now. So we crossed over. You know, this is a monthly chart. This is a slow moving chart, but it definitely gives you a good direction where things are pointed. You know, if we look at the Russell real quick for the sectors, you can see this one crossed over in January, and it's been, you know, pretty ugly since then. So let's go through each of the sectors. You know, last time we had 4 bullish. So what I see is one of those dropped off. But I'll take you through each one of those kind of quickly. So this is Xlb Materials. You can see this is just starting to cross here. It held up pretty good, but you know it's just crossing now. So that it's at the beginning of turning over like the other ones did. Just a little behind the S&P. Energy still rock solid strong. So this is you know, I don't remember last time we did this a couple months ago. You know, it's still been strong. So XLE remains bullish. As far as I'm concerned, you know, pretty strong overall. Let's go next one, XLF. You know, same as materials, just crossing here in April. You know, we didn't have this as bullish, and it's definitely not been bullish. It's still not bullish by any stretch of the imagination here. You know, as it's just basically crossing. All right. XLC Communications. This one hadn't been around that long, but obviously this one's got crushed. You know, it crossed in December, and we're almost down to the bottom of that Keltner range that I put out. So, you know, this one, you know, you could kind of at least keep an eye on as potentially bottoming, you know, in the next month or two, possibly. You know, as this little purple gets down around 0, they're usually support, and then you can see stochastics are kind of flatlining. So something you can look for. I wouldn't say right now, but you know, we can revisit that in a month or two. But it's been super ugly on these, and this is like Facebook and like 18T, things like that are in there, communications, and like I think like Snapchat, stuff like that, social media, and things like that. So not really tradable. Staples, yeah, this one's that we had this bullish last time, so it's held up pretty well. It's kind of borderline. I mean, it's pretty close. But it can obviously keep bouncing up. This one doesn't move a lot. So I would say this is still slightly bullish. I'd just be careful with it. It could quickly turn into one of the crossing ones. But I'd say it's slightly bullish right now. Still, I mean, it's holding above there. As long as it holds above that line, it's still bullish. It's still trending up. But all right, XLY. Yeah, pretty bearish overall. Let's see, it crossed in February. Pretty big down move since then. Not really near the bottoms yet either. So pretty ugly overall for everything. This one's kind of same boat. Crossed here February, kind of hesitated, and then decent move down. Definitely not bullish. Healthcare, just crossing. And when we didn't have this bullish last time, I think it probably February or something, we were talking about it. So this is kind of where XLP is right now. So that's why I say it's slightly bullish, but I'd be very cautious with it. It hasn't moved a ton, but definitely not bullish in any stretch right now. So what is that? That's healthcare. So XLRE. So this one was bullish last time, and now it's just crossed. So February was still bullish, and then it basically, if you check these out every couple weeks, you can see things getting ugly. So this one just crossed this month with a big move down there. So this one is crossing like materials and things like that. So there's even more and more that are bearish as far as this kind of charting that I look at. You only have really two strong bullish. XLP is kind of borderline. I wouldn't get too active with it. So this is the other bullish utilities. Bullish since last time, still chugging along strong. Market down huge, it's barely down. Just been strong. Trending still upward. I think these are good inflation hedges. They're paying dividends. They can, move their rates up and gouge us even more. All these utilities. So that's kind of where seems like people are putting their money. And XLK. So definitely bearish overall. Sometimes things like the bounce around kind of middle, but it's been so elevated, outside of these ranges so long. It's hard to say, but definitely not looking bullish by any stretch here. So summary, we have two bullish, strong bullish would be XLE and XLU. So energy and utilities, and then staples are trying to hang on. Everything else, looking pretty ugly. Possibly some bottoms. I wouldn't say they are at bottoms yet, but something we can look for with like XLC and XLY's getting down there, but not quite to the level XLC is, the social media. So, but getting close, down there. So, we can start looking for those, over the next month or two to see if there are potential bottoms. But right now, everything looks pretty bearish other than XLE, X utilities and energy. So that's the summary. Any questions, comments, or any other symbols you want to pull up? I think, what do you like, Sudhir, IYT?
Yeah, IYT.
Yeah, so just
It's
cross
there's nothing that's looking
crossover.
good.
No, crossover in April there. Pretty big move down too.
Yeah.
Yeah, this is like FedEx and truckers and stuff like that, right?
Correct.
Yeah.
FedEx, UPS.
Yeah. So you can do the same thing with like any symbol like that. You look at the long-term chart, what's the China one? FXI, yeah. So like this one crossed in July. And this is, I mean, you can see, this one is, we want to see basically some kind of like upward movement here. It just, it's actually getting larger, like the gap between the signal and the indicator. Like it's getting bigger. So you want to see that start to turn before you even consider like bottoms and a couple other indicators you can look at. That, I mean, this shows you the power of when things like cross, you can see them here. I mean, just huge moves, right? Gives you a nice pointer where things can go, and then you just got to watch it, check it every couple of weeks or so. I think it helps for kind of long-term direction. So like if you're doing any bullish trades, you probably want to focus on energy and utilities. Outside of that, you're gambling. So were you gonna say something else, Sudhir?
No, I agree. Other than energy and utilities, everything else is headed down.
All right, anyone else? You guys are quiet out there. No? All right, well, I'll let Sudhir, you ready to take over and do a quick rundown?
Yeah, I can. You want me to share or?
Yeah,
how do you
yeah.
want to do it? Okay.
Yeah, I don't have.
Okay. So let me see. So I have a number of screens going. Let's see, share. Can you see the Excel file?
Yeah.
Okay. So this is Lee's Excel file. Is Lee on today?
I don't see him. Yeah, he's there. Lee, you there?
Yeah, I just had to unmute, sorry.
Oh, yeah.
Okay. So Lee was nice enough to send this out. There's, I think, 37 or 38 trade entry days here. And so let me move this one over. Okay. So what I did was I went into, over here, the wizard, and did like what Josh suggested. I typed them into this Excel file. And interestingly, it only accepts 34 entry dates. So I had like 37 or 38, whatever's in the Excel file, and only 34 ended up uploading. And I don't want to go do it again, but I'll go over here. These are the entry and exit dates. And I just put in a simple long put that was 120 to 180 days out, right?
Yeah.
Delta 45 and so on, right? As close on 25% profit, stop loss at 75%, okay? And you can see that it gave a 68% win rate and profit factor of 1.02, which, yeah, not great. But one of the easy things to do in the Delphian system is once you have the exit and entry dates in there, go over here, and I like this screen to do a lot of easy quick tests. So you can see if you have long stock, if you just did long stock on those dates, you would be losing money.
Mhm.
So if you did short stock on those same days, notice there's 34 dates. They're all SPY that I loaded in here. Poor win rate, but better. So I went through for about an hour maybe, and I tried bear put, for example, right? Delta at 45 and the lower leg maybe, where was the lower standard deviation, right? Above. And you get out at 25%, stop loss, let's just do 100. And let's do that one, okay? Oops, what did I not
Oh,
do?
you good?
One. Okay. And the nice thing about this screen is I can sit here and do a lot of different options and a lot of different things without doing the full back test. So it's kind of a quick back test, right?
Mhm.
On those 34, now my internet connection is going to take time.
Yeah, it's the same functionality we use on seasonality and state transitions.
Right. So you can see 58%. Now, I sat here for about an hour and tried all different combinations. I won't go through all the different combinations that I did. I don't even remember them because I didn't write it down. But the one that came up the best, I decided to do this butterfly. And this was what it was showing. What day did I send this email? May 11th, okay?
Mhm.
So I'll duplicate it here. It won't come up exactly with the same numbers. I just tried it before the call because the butterfly is not fully coded in the system. So you do a long put butterfly, and I had originally done a weekly, set your profit at 25. Butterflies in general work better with a shorter time frame. So I had tried 15 days, it didn't work as well. And since this is the SPY, the butterfly is not fully coded to be balanced in the Delphian system,
Right.
but the SPY, it always has strikes, like every dollar has a strike, right? So if you want to do a 15-point butterfly, so I just put points from current close. I just put 1 below. Or I'm sorry, strikes from current close. 1 strike, which will usually be $1. Okay. And then 15 points would be, this would put it 16 strikes below current close. And then to balance it out, you would be 31 strikes below the current close, right? And so using 34 out of the 37 or so dates that Lee did, this came out the best, 73% win rate and over 2 profit factor, 2.08. Now, keep in mind, for those who are not as familiar with the Delphian system, you say profit of $1,621. Oh, wow, that's not that much. Whereas Lee was showing in his manual trade $50,000. But the test is just doing 1 butterfly, right? And 1 butterfly on the SPY may cost you $100. The way you would trade it is you want to have a uniform amount of risk. So if you go back to Lee's, he was always doing around $1,000 of risk. Okay, so this specific screen doesn't allow me to do that. It's just doing 1 butterfly. But if you did, let's say 1 butterfly cost you $100 and the next time it cost you $200. Well, the first time you would do 10 butterflies to get your risk at around 1,000. And the next time, if it was $2 per butterfly, you would do 5 butterflies. So you have an uniform amount of risk, and then you would generate the profit that would be showing here, because that's what he's doing, a uniform amount of risk, roughly in the, you know, I would say this all averages out to around $1,000 per trade. Does that make sense?
Yeah, to me.
Yeah. Lee, what are your thoughts? Does that make sense what I did there?
Yeah, definitely. I see where you're going. I went back like, yeah, so anyway, just, yeah, I agree.
Yeah, so this is what came out the best of all of the, you know, I tried bull put spreads, I tried everything, just sitting here trying different combinations. And this combination, you know, came out 73% profit factor of 2. If you go to a 30-day weekly butterfly and set your profit on 25%. Now, I do think that your profit would actually be more because this is 30 days out. And if the market started to go against you, you have 30 days of time, and let's say it started to go up. The logical thing a trader would do is close out the butterfly for some salvage value, say 15 days before, right? So because, you know, this is assuming 100% stop loss, in reality, most traders would say, look, the market's in a counter trend rally, let's close out the butterfly for some salvage value, and, you know, so you limit your losses. So I think it would actually be better than this, but, you know, that's hard to duplicate in actual practice, in actual backtest. Make sense?
Yeah,
Yeah. I don't want to interrupt.
No,
Sudhir,
no, I'm waiting on questions.
Okay, I don't have any questions. So, but I do have a continuing thought on the trade. So at the appropriate time.
Go ahead.
Okay. Can I get control for a moment?
Oh yeah, yeah, I can unshare. So as I figure out how did I share? How did I, where is that?
I can do it.
Yeah, and
I'll share and then I'll stop share. There we go. Make it easy. Now,
Okay.
you can share now, Lee.
Okay, let me.
we're much better on the listening end of Zoom. I'm not on the operating end of Zoom that often.
I think this is it. Okay, can you see it?
Yeah.
Yeah.
Okay, now I've got a conundrum, and I never get to use that word, and I'm so happy. So I did the same thing you did, Sudhir. I went back and tried it one way and another, and I saw how you were getting better, or I read your email, and you're getting better and better win percents. And that's great. That's where we're going. Now, I only want to talk about runs 1 through 4, okay? And I'm just doing long puts, and again, 120 days. And this may have been 50%. Well, I changed it between 25, 35, 40, 50% profit, okay? Here's my conundrum. All of my trades, Josh, tell me I'm wrong or I'm wrong, please. All of them invested $35,000.
Yep.
Now, this is lousy, 62%. And it gets better, 73 is better, 77 is better, 85. However, they're all investing 35,000.
Right.
Now, my profit is best at a 62% win rate.
Yeah, can you scroll down just a little bit? Yeah, there you go.
Okay.
Yeah, so that's the that's 98% profit target is run 1.
Yeah.
So you're looking basically, I don't know why I picked that, but that's basically like 100 and you're winning 62% of the time. So, you're risking all of it and you're trying to win it all back. So as long as you break it, as long as you're over 50%, then, you're winning, right? Technically. But yeah, you can see it dropped, run 2 over here is 50%. So, as this increase, this decrease, right?
Mhm.
Yeah, so that's the trade-off, right?
Right. And I'll tell you, I did something else because it was manual. I went back through and eliminated trades that I had a reason to eliminate. So I probably had 29 trades in here. Give me a little rope on that one.
Mhm.
Okay, so I've run this on a number of different, I did it on the SPX. This is the SPY. And I keep getting into this situation to where the first trade, this is about 40% of that 35.
Mhm.
This is about 20% of that 35. And I ask myself, which do I want? Which do I care? Which do I care? Do I care about 1%? Or do I care about the bell rings at 4 o'clock and I have 14,000 or I have 7,000?
Hey, Lee, can I comment for a minute?
Sure, Bob, go right ahead.
This is just strictly personal, but if it were me, I would trade run 4 in order to get the greatest return per day, speaking to the efficient use of capital.
Okay, return per day, is that the 1.1?
Lee, it is. And if I can elaborate on the point, I'll do it really quickly.
Sure, go ahead.
As an options trader, we are typically in a trade for a relatively short period of time as compared to those that are investing as opposed to trading. So if I'm a trader instead of an investor, I care more about what I make per day, because if I free up my capital quickly, I can use it productively someplace else.
Yeah, I hear you. Good point.
That's
Good point.
I'm off my soapbox, but that indeed is my soapbox.
Okay, okay.
The other reason to do run 4, everything sounds good on paper. It's kind of like, I forgot, I think it's Mike Tyson who said everybody is great in a fight until they get punched in the nose or something like that.
Yeah.
Every trade looks great until you suffer this drawdown, this max run down. And these big drawdowns, they are emotionally tough when you have real money on the line to live through. And this run 4 has the lowest drawdown.
Okay.
And
Okay.
it's really tough to run through. If you put up $35,000 on run 1, see a 50% drawdown.
Okay. I hear, gentlemen, I hear what you're saying. I see it. Greed has got me. But hold on. Now hold on. Do we believe what back testing shows us? Because this is over a period from 2008, I don't know, up to 2020. So it's not in a constricted period of time. I believe the back test. And again, it's a conundrum for me because this is the worst win percent and this is the greatest profit. Does
the back
anybody have
testing is accurate, but the back testing has no human emotion in it, right? And the back testing doesn't have to take out money because your car broke down or something like that. You know what I'm saying? So the test is accurate. but it depends on that. You also have to factor in your own, emotional reaction to things like large drawdowns. Some people can tolerate them, and maybe you can. And so you want to go after run one. I personally am more like Bob. I would look for efficiency, and I don't have the stomach for large drawdowns. But every trader is different.
Right, right. Well, I hear you, and they're all great points, everybody. This is just weird to me. Does anybody have a theory why this is so great? This 14,000?
Well, I think Josh said it. You're asking for 98% profit, which you got 62% of the time. But I don't know what your stop loss was. I'm assuming it's 100.
No.
That means 38% of the time you took 100% loss.
Well,
you can see over there on the right, the biggest loss, 32.6. So that's your biggest loss. So you ate $3,000 trade once.
okay.
And then, over the life of this, your max rundown here was 17,000. And you got all the way up to 30, almost 32,000. So like if you called the tops exactly, kind of like you did initially, then, your tops, you would have made 32,000. So you'd almost make 100% on this, based off of that.
Okay.
So, yeah, the more you ask, I mean, if you put in, 150% profit target, you'd probably have like win rate of 52 and you probably made more money. At some point it'll cross over where you're asking too much. If you put in like 300% or something, there'll be like a point at which, depending on the trade, like this one, it'd be interesting to see how high you go, if you're just looking at profit only, but there'll be like a point where it's just, okay, you're not going to make, your 300% profit target. You only made like $7,000 or something like that.
Mm-hmm. Well, let me ask you one more question, okay, and then I'll stop. Let me throw another screen up there.
Mhm.
Now tell me the error of my ways. So the purpose of the trade is to capture this huge movement in the SPY.
Mhm.
And I think I'm doing that. And I think that plays in, that has some bearing on why I'm getting $14,000 profit versus 7,000. It's because the movements are so gargantuan, so large, and so quick. There are 2 or 3 trades in here that is making this trade, I think, I don't know that I'm right, but it's what I'm thinking, make this trade act the way it does, and what I said at the beginning about a conundrum. So anyway.
Yeah, it definitely has legs, but I think it's just a trading style, obviously. Obviously,
Right.
It's profitable. I mean, you only have to win, better than a coin flip, to make money on this trade technically. Whereas, Bob's focus is this, he's earning, 1% a day here. So, and you're averaging 20 days. So, here you're averaging 55 days. So, that's just like the trade-off,
Right. And I think the question is, can you make more money after the 20 days reinvesting your money than the 7,000 additional I would have made, let's just say. Okay, I don't want to shove it back and forth. I appreciate all the comments, and that's what I
Yeah.
asked for. And I just don't want to belabor the point anymore. So what if Joe has thoughts he wants to share, love to hear them.
Hey, Lee, good dialogue all around. I honestly don't have anything to add on it. I think it's great that the system allows for, such detail in results. But, this whole thing about trading, it's an art form. I'm often talking, and I think I will just in a minute, about, analyzing the charts. What are we comfortable with? As Sudhir said, he doesn't have the stomach for the big losses. So, and I know, there's no black and white here. It's just a question of finding your comfort level. And then, I think fortunately having the tool here that offers so many insights. So nothing to add, Lee.
Okay, thank you. I'll mute now.
No, that's great. Yeah, I appreciate it. Sudhir, thank you for, showing us what you did, and same with you, Lee, and appreciate Bob's comments. I think it's a great discussion, Okay, we'll move on. We only got a few minutes. I think Joe had some stuff to run through real quick.
Can I share, Josh?
Yeah, there
Okay.
you go. It's available.
Okay. Let me, I just pulled up a few screens. Let's see. I gotta find these guys. Oh, come on now. I've probably got too many screens pulled up here. There we go. So I just wanted to start
not
with the whole
sharing,
idea.
Bob.
And actually,
Joe, you're not sharing. You got to hit the share.
yep. Okay. Bear with me. There we go. Thank you. All right. Better, Josh?
Gotcha. And we see Netflix.
Okay. Yeah, bingo. So I just wanted to speak to, the whole idea of risk management. I mean, it's mind blowing to me, how some of these stocks are getting cratered. I mean, just overnight. And I think this group, is very focused on risk management, but I think you don't hear people talking about cash secured puts, in this bear market for the most part, where, for a number of years, that was a lot of the dialogue. So just to reemphasize how important spreading is versus, or if you want to be long a put or long a call, that's fine. You got finite risk. But the reason I have Netflix up is just because, we've talked before about strike price selection. And, God forbid it, you just been short some puts in Netflix, obviously it would be a very, very painful situation. So just this whole idea of, being comfortable with the types of trades you like, for a bear market, for a bull market, for a neutral market, and, the importance of strike selection. Walmart, I like, the ABCs, the Fibonacci retracements. Here's Walmart, rallied, from that late February low, rallied right up in, beyond the March highs. You do your retracements, I would think, darn, and for me personally, I thought last week's low of, what was it, last Thursday's low of May 12th, I thought that was going to be a really pretty meaningful short-term low. And I'll go through some charts and tell you why I thought that. Remains to be seen whether those lows hold or not. I think Josh's analysis as far as a trading range makes a hell of a lot of sense. No way I expected a day like today coming out of last Thursday's short-term low. But here we are in Walmart. If I'm doing my usual, take a look at the charts. Okay, strike selection. I want to be short or I want to be, I want to put on a bullish put spread. I'd feel pretty darn comfortable about selling that 145 put in Walmart. and then boom, lo and behold. Now, granted, earnings were a factor there. You got to take that into account, as I'm sure we all do, but just the magnitude of the moves and the importance of risk management, you know, and then here's targets Sudhir mentioned. I mean, who would ever think that these things could be down 25% in a day? But lo and behold, they are. So just something to consider, or just kind of reemphasize the whole idea of risk management. I put together the S&P. You know, I like to talk, you know, Fibonacci's, ABCs. So, you know, we go back to the January low or January highs, just showing, you know, and basically 5 waves depicts the primary trend of a market, and ABC, counter trend rally, ABC is the counter trend. So, you know, we had our top early January, first leg down was 1, rally back up 2, the low into late January 3, we rallied with an ABC 4, and then it was, I think, a February 24th low where I have, you know, 5 and A, you know, on the chart here. So we got our, there's Josh, 1, 2, 3, 4, 5, adding those lines down.
Yeah,
Out of that,
I figured it out of Zoom how to do that. So you like it?
So outstanding. So, you know, primary trend down, as we all know, we've been in a bear market for, you know, with NDX and Russell since November, SPY since January. We then get the counter trend rally, you know, A, B, C back up to B. So we're A down inside of a 5 wave, back up to B with the counter trend A, B, C. And then this is why I thought, you know, last Thursday's low was really going to be meaningful. We got another 5 wave down, you know, the 1, 2, 3, 4, 5. And basically you get into a 5th, and it really speaks to the psychology of the market, in my opinion, which to me is as important as the economics, that psychology. And typically you get into a 5, you're towards an exhaustive end of a move. You get extended 5ths, which we have not had. And lo and behold, you know, we're getting crushed again today. We'll see if, you know, the recent lows hold. But that's just kind of my short-term wave count and that's why I go to charts first, how I select my strike prices. That's the same chart. And the reason that's obviously in the Delphian platform, it's important that you're comfortable with, you know, the chart package you use, because charts look awful different from one package to the next. Always looking, and Josh is great about this, always pulling in, you know, the long-term charts, going back to the March lows. We've talked about this for a long, long time. You know, SPX certainly has lagged Russell and NASDAQ significantly. It topped later. It sold off not as hard. So we got within about 40 points of the 3/8 retracement going back to the March low last Thursday. Didn't get all the way down. I think the number's 38.14. I think the low is 38.58. And, you know, we started to rally. So, you know, that's SPX. Josh mentioned too. Just the one other thing about SPX, it makes me a little bit nervous. And I think it's a little bit of a battle between, you know, who's leading in the market. Is it Russell and NASDAQ, which clearly has been the case with the SPX catching up. The thing that, you know, makes me cautious and nervous here is that now the database is 15 years worth of data. We're up to 15 years now because it's January 1st, 2007. There have only been 16 occurrences in state 8 in the SPX in 15 years. And, you know, the averages we have. But what makes me a little nervous here, average number of days in those moves is 31 versus we're only at 12. And we're nowhere near the average size move, which is, you know, over 9%. So, you know, some duplication of what Josh had talked about earlier, but just wanted to point that out. We'll then just kind of quickly run to the other two. Here's Russell. Russell, we topped in November. You know, you got a couple, it's really more of a big ABC formation than 5 waves in the Russell. There's that same chart topping out in November. You know, you get the lag down into this January low. That's your A, sideways B, leg down here C. oftentimes, I think you heard me talk about symmetry in the legs. You know, this was like 564 points. This is south of 500. I think it's about 475. So, you know, if we were to break lower in Russell, you know, a symmetrical ABC takes us down to about 1575. You know, but we basically, as Josh has been talking about for a number of weeks, 1700 was a significant retracement. It's a low that's held, and you know, we'll just see what happens. You know, there's the same chart that Josh pulls up frequently, just that, you know, 50% we got to last Thursday, basically right to the number at 1700. And you know, Russell, Josh pointed this out earlier, unlike SPX, we're close in terms of duration and close in movement in terms of how far we've gone to the downside. And basically same thing in NDX, you know, we got to 50%. We actually had a 5-wave down here again. And I think going back, we had the same thing in Russell in this last leg down, the C leg in Russell was a 5-wave. NASDAQ, you know, 1, 2, 3, 4, 5 straight down. You know, again, sort of why I was looking for a more meaningful rally to the upside. NASDAQ, just like Russell, and I guess not surprisingly, since they've been paired together since November, almost the same duration. We're almost, you know, out to the 31 days. The size of the move down is comparable to, you know, again, 15 years, only 12, you know, occurrences in state 8. So let me see. And then going back to it, to me, this is an incredible stock pickers market. Incredible. I mean, there's so much volatility. You know, we all have our disciplines, how we go about, you know, picking different stocks to put a trade on for. IBM was just something that, you know, I heard about, you know, recently they had their earnings, you know, earnings were good. Actually got a hell of a move out of the earnings, and earnings are always such a key factor. You know, we'll continue to make improvements. Our chart page, you know, in Delphian actually doesn't have, this is the state modeling page. The chart page doesn't have the earnings symbol. We have to add that. Josh and I have a list of literally hundreds of things we want to do to the platform. Where, you know, it's happening, but it's happening slowly. But just as an example of a stock that, you know, I saw it popped after the earnings, so I started looking at it, and, you know, for me, if I'm, you know, I'm real comfortable, you know, selling the 130 put, you know, talking about a short strike. We got the rally up, and then the market, you know, came basically not crashing, but sold off hard into last Thursday's low. I think the IBM move was just sympathy to that downside market, and, you know, it's rallied, you know, 10, 12 points since we turned up. I don't know what it's doing today. I'm sure it's down some, but, you know, just the whole idea. We're looking at bull put spreads, you know, what strikes are we comfortable with? And here's an example for me personally where IBM, I'm more than happy to sell that 130 put. I'm not sure about the 135 put, kind of stay away from that just because of the overall bear movement in the markets. But, you know, whether you're selling the 130, 125, 130, 120, you know, whatever the case may be. But just a little bit how I go about getting comfortable with strikes. From an education standpoint, I'm covering, you know, a lot of different things here, but for people on the call, and I don't know how many there are who might be relatively new to options, the OIC, Options Industry Council, does have a darn good website. And you can go over to this Getting Started page. Up here, the Explore page gets into a lot of different strategies and things like that. Again, only for newbies, but it's a heck of a good resource. A couple more here, Josh. I don't know how many people, you know, this is the, let me see, Josh. This is from the dashboard. No, not the dashboard. Let me see. Where do I find this page, Josh? I'm drawing a blank.
The dashboard.
It is the dashboard. Okay, right. Yeah. So dashboard top right. I don't know how many people go in and look at the market movers board, but damn, there's a lot of great information there. And one of the ones, you know, in a stock pickers market, one of the ones that I like is, you know, the gap up and gap downs. One of the negatives here is that so many of the darn stocks are, you know, too low priced. You got to fish them out. But if you're looking for ideas, you know, to me, this gap up, the gap down, and again, so many of these different boards have phenomenal idea generation ideas, but this is one I like, you know, for the higher price stock. Obviously not these low price, you know, pieces of nothing, but when you're looking for bullish or bearish ideas, I think it's a great place to find them. Okay, yeah, so one of the gap uppers was this stock, B2 Holdings. I don't know from Adam, but I just went in this morning, took a look at it. Okay, is it a half decent state modeling stock? That's something I always look at. I like to think about state modeling and just ask myself, is it, you know, is it good in state modeling? You know, does it give, you know, state eights at bottoms, things like that? Just kind of analyze how good of a stock it is from a state perspective. But just an example here, I don't know what the news was. The earnings obviously didn't respond too well a week and a half or so ago. I'm guessing, and I didn't even go in and look at the news. It wouldn't shock me if somebody was talking about buying the company with a move like that, but don't know. But again, that's just one example of idea generation. It's a decent price stock. And if you're looking for ideas, just one way to do it. And I think that's it, Josh. A lot of different screens, a lot of different things, but
Yeah, definitely
you know,
good commentary running through things. So, yeah, thanks, Joe. Yeah,
my pleasure.
Yeah, appreciate it. And yeah, thank you to everyone that tuned in. And is there any questions before we close up or comments?
Dan here, I got one.
Yeah, yep.
This is for Joe. Joe, when you were looking at, I'm thinking about the Elliott wave and where you see the where you see Elliott wave right now, what wave we're in. And my other question is, two other questions. Do you usually use a daily time frame, or do you use that for all time frames? And if you're trading the right side of the chart, let's say you're doing an ABC pattern, and what do you use to trigger the turnaround or an extension into a 5-wave down? So in other words, it can usually do either an ABC, but then that ABC can turn into a 5-wave, which to me is kind of difficult because it gives it a little bit of unpredictability, if you will.
Totally agree. Totally agree. And it's really just a question of, you know, tracking the levels, you know, new highs, new lows. I don't really look at the stochastics and the MACDs, you know, the way Josh does. So it's really a combination of the Elliott wave with the Fibonacci retracements. That's really, you know, for me, what I really prefer in terms of how to analyze things.
Okay, yeah, that's what I look at too. I was just wondering if there was anything different that you were doing that versus what I was doing. So
it is, and as you say, those fifth leg, the ABCs that turn into 5 waves. I mean, you know, as I've said many times, and I know you agree, you know, there's a lot of art to it, and that's why the whole idea of, you know, when something goes bad, the key is really what option strategy do you have on and how much risk, and you know. So that's why, you know, I mean, I started by talking about the spreads. I think everybody on the call probably, unless, you know, they're new to the game, you know, they trade spreads just because, you know, you can quantify, you know, your drawdowns.
all right, beautiful. Thank you.
Sure.
Yeah, thanks, Dan. Anyone else before we close up?
It is ugly out there.
Yeah, it's ugly. Yeah, those key levels, right? Let's keep those in mind. On the Russell's 1700 and SPX 3800 on the downside there. So, all right. Well, thank you all. It's a pleasure, and we'll do it again next week.
Thank you. Good meeting.
Thank you. Very good.
Hi, everybody.